Monday, April 20th, 2020. For the first time in history, oil prices plummeted into the negatives. And by the time the closing bell rang on Wall Street, oil futures traded as low as negative $40 a barrel. This dark day for the global oil industry occurred exactly 4 months after Guyana, the world's newest petrostate, began production. Welcome to another episode of For the Culture Guyana. Today, we are discussing negative oil prices and its possible effects on Guyana's oil economy. But before we get into that, smash that like button. And when you're done with that, subscribe to our channel and share this video. If you're like many people, when you heard negative oil prices, your first question was probably, how the heck do you have a negative price? Does this mean a company will literally pay someone to buy their oil? The answer is basically yes. To explain, we first must examine the very nature of a transaction. A buyer exchanges currency with a vendor in order to obtain some good or service. So when you look at it like this, we actually pay people to take things from us all the time. When you get a haircut, you pay the barber to take away some or all of your hair. When you pay an exterminator, you pay them to take away the pests. And of course, you pay a disposal company or your municipality to take away your trash. Pay your taxes. These are often called negative assets or negatively priced assets. For these types of assets, it costs the buyer more to hold on to it than to pay someone to take it off their hands. Now, you might be saying, well, George, that's a nice explanation of negative assets and all, but that still doesn't explain why oil became cheaper than trash for a day. Well then, the answer to that lies within the technicality of the global oil market. Like many commodities such as corn, soybeans, etc., oil is traded on its future price. This means a trader will enter into a contract with a petroleum company to purchase a set amount of oil to be delivered to the trader in the future, hence futures. There are many complex forces that go into it. Far too long and complex to explain for this video, but just know that the cost the buyer pays is determined not by the market price at the time, but rather an agreed upon price at the time of the contract signing. Usually there's no problems with this arrangement. Now let's rewind back to last month though. April 21st was actually when May oil futures contracts were due to expire, and traders were desperate to avoid having to take the physical delivery of oil and to pay for storing it. Because by this point it had become obvious to all the traders that demand had dried up faster than a salted slug in the midday sun. Why? Massive levels of petroleum overproduction in recent years has filled up much of the world's storage tanks. The cause for this overproduction deserves a video to itself, but just know that the world's oil storage was close to full capacity already, and now with lockdowns across the globe keeping billions of people at home and not driving, there is even lower demand for oil. So to avoid having to hold on to a product that no one wants right now, traders began to sell and sell and sell until the price of these contracts went below zero, and yet they still kept selling because they were trying to avoid the physical delivery of that oil. And by this point, oil producers began paying buyers to take the commodity off of their hands over fears that their own storage capacity could run out in May. Oil firms who couldn't sell their oil had to resort to renting oil tankers to store their surplus supply. Actually, at the making of this video, literally hundreds of full oil tankers are just sitting off the coastlines of the world, just waiting to be used. But there's a problem with this too. Contrary to the popular saying, oil does in fact spoil, meaning that many oil producers already hamstrung by debts and record low demand found it easier to just shut down instead of weathering the storm. As of May, hundreds of oil services companies in the US and Europe have or are considering filing for bankruptcy. And so clearly this does not paint a rosy picture for many nations who rely on oil profits to drive their economies. So, can the recent slump in oil prices caused by this supply glut destroy Guyana's economy? Short answer, no, for multiple reasons. The first being that Guyana's oil is priced at dated Brent, which is traded on an entirely different market than West Texas Intermediate, which is the world's most widely traded type. The difference between the two are not important to the video. However, just know that Brent crude is considered a higher grade, and as such, it often trades at a much higher price. While the WTI market was plummeting, at worst, the Brent reached just $15 a barrel. Second reason why Guyana should be safe, at least for now. The first 3 of the 5 oil lifts Guyana is expected to produce this year have already been pre-sold. But actually, the proceeds from the first delivery was already deposited into Guyana's bank account in April. Unfortunately, we can't touch it due to the ongoing political situation, but that's a conversation for another video. However, this does bring me to my third point. The economy has yet to become reliant on the oil industry. While Guyana's Department of Energy admits there will be some short-term economic contraction due to the pandemic, the economy will not take a hit from oil prices because, like I said, we only got our first payment like last month. So, the only thing that will be lost is the level of projected growth. But despite this, Guyana is still on track to have the only economy in the Western Hemisphere that is expected to grow in 2020. So, good for us. So don't fret, fellow Guyanese. Our oil is safe for now. Okay, that's not true. There's actually like 1,000,001 different threats to the oil industry, but at least we know that any potential failure of the industry will not be any fault of this most recent market shock. However, that's just my opinion. And if you think I'm being far too optimistic, let me know in the comments. Because trust me, we read all the comments. Or you can join the conversation on our Facebook page where we post more great content on Guyana's place in current events, geopolitics, entrepreneurship, and more. Our Facebook community is growing thanks to like-minded individuals like yourself. And thanks to our Patreon supporters. Your support is what keeps us going and brings us one step closer to being able to do this full time. And if you'd like to support us, please hit the link to our Patreon profile. Or, if you'd prefer, we also accept PayPal. Thanks for watching until the end. You must have really been interested in what I had to say. So, if that's the case, then smash that like button. And if you haven't already, subscribe to our channel. And if you didn't like the video, I don't care. Smash the like button anyway, because it's free. And when you do it, you're doing it for the culture. Thanks for watching, and see you next time.